Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's November 29th. We are starting a lot of economic data going into this week. So yesterday we had the only reprieve of the week, but the rest of this week we're going to have a pretty full week of data here. So we're going to jump right into it. We'll start off with the GDP, or the gross domestic product, for the third quarter. Now, this is the second reporting. We'll get our final reporting next month here in December. But their initial reporting, the first one, came in at 2.9%. Forecast was supposed to come up to 3.1%, and it came in at a whopping 3.2%. Now, this is a really good number. A lot of things were increased from investment. There was a huge spike in investment from businesses, from investments to consumer spending to government spending. Everything went up in Q3, and it came in pretty well here. So because of this is actually almost giving the Fed enough ammo to raise rates. Basically, the Fed funds futures now is at 100%. That they believe they're 100% confident that the Fed will be raising rates at their December 14th meeting. So be prepared for that. I think we've all been pretty much speculating that that's what's going to happen, but now it looks like it's more definitive here. Also on the docket today, we have the Case-Shiller Home Price Index. This is an index that gauges the home prices in the 20 of the largest markets in the U.S. So the previous reporting back in August, we had 5.2% year-over-year growth, and in September it increased to 5.5%. So from September 15 to 16, it jumped up to 5.5%. So nice, healthy home appreciation we're seeing still. We also got consumer confidence for the month of November. So our initial reporting came in at 100.8. Forecast was going to go up to 102.5, and it rose all the way up to 107.1. So really good numbers overall right there today. So can't really say anything bad about any of these numbers here. It's all looking really good here today. So of course, stock market was a little mixed, but I forgot to change this, but earlier it was a little mixed, but now pretty much across the board, stock market's up right now. It was taking some of these some of the indexes were taking a little bit of a breather, especially after this post-election. They've been spiking up, reaching new highs, and as a result, they've been taking a little bit of a breather, kind of reevaluating their positions. But now they're up again a little bit. So also today we got bunch of Fed speak. We got Fed speakers speaking today, and of course anything other than possible raising rates or any surprises, that could also spook the markets a little bit today. So be prepared for possible volatility depending on what's being said by the Fed members today. Now on the bond market here, we're getting a nice little rally. We had a nice little rally yesterday. We rose above, and then today we're up again. We're up right now about 12 basis points, just touching out the second layer of resistance. So yesterday we closed above the first level resistance, and now we're at just about at the second resistance at the 103 mark here. And we got the 10-day moving average, so we're just above the 10-day moving average right here. So this is looking good. We may get a price, earlier today this morning, we were actually at the GDP when that came out was pretty hot. The bonds worsened, and they were down 10 basis points. So with these swings here, it could lead some lenders to reprice here for the better at some point too. So we did start the morning at even where we left off yesterday, and then of course when the GDP came in, we were at negative 10 basis points. But we've also got the Fed purchasing about $2.5 billion of mortgage-backed securities today as well. So that's helping drive the demand for mortgage-backed securities, which is also helping to improve interest rates today. So hopefully we can continue to see this trend. As we can see, we came down here, or about here. Now we're starting to see a little bit of improvement here. If we could get maybe another day or two continuing upwards, then we might be able to get a little bit more bullish here. But right now I would be a little cautious as to saying about being bullish on a bond unless we can actually see a definitive trend going upwards here. We want to see a couple of days, each one climbing above the other, improving it on it. So, all right, folks. Anyways, if you guys like to get more updates throughout the day, just come over to Twitter. I'm on Twitter, and I do post updates throughout the day at Mike Bjork. So just go ahead and find me on there and follow, and you'll get your daily updates throughout the day. Have a wonderful day. We'll look forward to seeing you guys tomorrow. Take care. Bye-bye.